HDFC Bank Management, Paresh Kankar speaking right now.
Of this, net interest income was 18,483 crores, and that was up by 16.9%. For the full year, cost to income ratio was at 45.6%, which has improved from last year's 49.6%. Yeah, we already started the call.
Just line to the speaker room.
Sure.
Okay.
And profit
You
before
are
tax.
currently the only participant in this conference.
The profit before tax for the full year was 12,772 crores, an increase of 31%. The effective tax rate has gone up for this year. It's been happening for the last few quarters as well. So for the full year, the effective tax rate was 33.6% as against 31% last year. And as a result, the net profit for the full year grew at 26% to 8,478.4 crores. So that's really the full year results. Of course, the consolidated net profit for the year was at 8,743 crores, and that was up 27.3%. So those are some of the key numbers for the bank as a whole for the full year. Moving on to the quarter, the total income for the quarter was at 12,790 crores, and that was up 14.9% over the corresponding quarter of last year. Net interest income accounted for 71% of the net revenues, and NII growth for the quarter on a year-on-year basis was 15.3%. This was driven partly by asset growth and a net interest margin at 4.4%. Other income, which is a non-funds revenue, that was the balance 28.8% of the net revenues, and other income grew by 11% from 1,803 crores to 2,001 crores. Operating expenses were once again held in check with a growth of just a little over 1%, and as a result, the cost to income ratio for the quarter, for the quarter ended March 2014, was at 45.7%, again as against 51.4% in the corresponding quarter of last year. Total provisions were at 286 crores as against 300 crores, and I'll talk about asset quality, which links into that a little later. Profit before tax for the quarter was 3,493 crores, an increase of 31.2%. Once again, the effective tax rate was substantially higher at 33.4% this year for this quarter as against 29% in the corresponding quarter of last year. Net profit growth was 23% with a net profit for the quarter at 2,326.5 crores. Moving on to some of the balance sheet numbers. The overall balance sheet grew by 22.8% to touch 4,91,600 crores. Loans and advances grew by 26.4% to 3,03,000 crores. Deposits by 24% to touch 3,67,337 crores. And the CASA ratio as at March 31st was 44.8%. You might recall in the December quarter, there was this special FCNR window of the swap with RBI where we had done about 3.4 billion. That was clearly a one-off. If you adjust for that, then the core loan and deposit growth was 21% or 21.8% and about 17% adjusting for that. As far as our network is concerned, the branch network touched 3,403 branches, of which 55% of our branches now are in semi-urban and rural areas. We added 67 branches in this quarter, and all of those were in unbanked locations. Moving on to asset quality, our gross NPAs as of year end were at 0.98%. This compares favorably with a little over 1% in the December quarter and roughly the same percentage a year back. The total restructured loans remained at 0.2% of our advances. On the capital adequacy front, our total capital adequacy is at 16.1%, of which our Tier 1 CAR is at 11.8%. The Board of Directors have recommended a dividend of 6 rupees 85 paise per share, as against, I think, 5 rupees 50 paise last year. So those are some of the key financial parameters. We'll be happy to take your questions.
So your asset quality has been in line around the 1% mark. What's your outlook as far as peaking out of bad loans are concerned? Also, we've just seen the breakup of the CDC. It has fallen. It was 16,745 in the December quarter at 14,420. So are you, bringing down your exposure to that segment per se because your asset quality remains healthy?
So first of all, I think the overall asset quality, at least in percentage terms, has now shown stability for the last couple of quarters. So, clearly the fact that we've really largely been through this cycle now with gross NPAs that still well below our historical averages, and the fact that incremental NPA formation has clearly decelerated. I think those are numbers that are evident in the NPA figures that we have declared. Specifically, as far as the commercial vehicle and construction equipment business is concerned, the portfolio growth has been negative, partly given what the demand conditions in that segment are, and of course the caution that I guess most players, including us, have been exercising in that segment for the last few quarters. But even in that segment, the NPA formation has tended to stabilize. So, we have seen the spurt that we had seen for about a couple of quarters going back to the last quarter of last year, and then the first couple of quarters of the March 2014 financial year. I think we've seen the worst of that tending to stabilize. There tend to be sometimes a bit of quarterly variations which tend to happen, so I can't say whether they have necessarily completely peaked, but certainly the pace of formation has come off from what it used to be. And it's, I know a lot of focus was on that particular product line for some time, but I think what we are heartened about is that at a little less than 1%, the absolute numbers as well as relative to where we've been on our historical numbers, I think, remain fairly healthy.
So margins में सुधार के लिए हुई है क्वार्टर में देखिए 4.2 से 4.4%. क्या rational, क्या reason है उसके पीछे, कहाँ से वो ये सुधार आने को मिला है? Secondly, क्या इस क्वार्टर में कोई restriction हुई?
तो हमारा ये कहना हुआ है कि जो मार्जिन है हमारे वो नॉर्मली 3.9 to 4.3, 4.4 ये रेंज में रहे हैं. More recently you can say between 4 and 4.4. So कुछ क्वार्टर्स में अगर आप सितंबर और दिसंबर क्वार्टर्स देखें तो स्पेशली इन द दिसंबर क्वार्टर्स विद द FCNR वगैरह उस मार्जिन में करीब 10-12 बेसिस पॉइंट्स की का रिडक्शन हुआ था. So partly with there was a slightly improved CASA in this quarter, and partly with the fact that increase in deposits, in fixed deposits which had been raised in the previous quarter, especially on the FCNR front, as that has got deployed, there has been a slight recovery in the margin. So of course when you go from 4.2 in the December quarter to 4.4, it's not really fully 20 basis points, it's about 16-17, because that was 4.23 and this is coming through. But the fact is that somewhere between 15-16 basis points has been the improvement in margins, and this was again something which we had said because it remains in that range, so it's not unexpected.